What if I told you that the market has this hidden schedule, a secret clock that Wall Street follows, but almost every retail trader is completely blind to? Well, today we're going to pull back that curtain. Let's sync our watches to the three most important, most explosive timeframes of the entire trading day.
I mean, just let that sink in for a second. These aren't just random, chaotic spikes. They are predictable windows where the big money, the smart money, quietly makes its moves. And yeah, we're about to lay out exactly when they happen.
So, the big question is, what are these hidden time windows? All right, let's not waste any time. Let's get right into it.
Okay, but first, we have to do this. The quick and super important disclaimer. All of this is for educational purposes only. Trading has some serious risks, so you've absolutely got to do your own research. All right? Okay, let's start the clock on that very first window. All right, first up, we have what's known as the morning momentum window. This runs from about 9:40 to 10:15 a.m. Eastern Time. Now, you probably noticed that's not right at the opening bell, and there is a very, very smart reason for that little delay. You see, those first few minutes of the trading day, the pros call that market noise. And honestly, it is pure chaos. You got all the overnight orders flooding in, big institutions are squaring up their positions, and all these algorithms are just sweeping the market for liquidity. It's a total minefield. The smart money, they just wait. They let all that dust settle.
So what's the actual playbook here? What do you do at 9:40? Well, it's basically a 5-step game plan. Step 1, you wait. You let that noise die down. Step 2, you confirm the market's strength. A good way to do that is to check if an ETF like QQQ is trading above a key level called VWAP. Now, VWAP is just the volume-weighted average price. Think of it as the real price based on where the big trades are happening. Step 3, you watch for the price to bust through the high that was set in those first crazy 5 minutes. Step 4, and this is so important, that breakout has to come with a big surge in volume. If you get all that, step 5 is to scalp that momentum. The whole idea here is speed. Get in, get out.
Okay. Next up, we enter a period that the pros call the lunchtime liquidity trap. It's usually between 12:50 and 1:20 p.m. Eastern. And yeah, the name alone kind of tells you something tricky is going on, while most of Wall Street is supposedly out grabbing a sandwich. This window is all about perception versus reality. For a lot of retail traders, they just see weakness. They see things breaking down, and they get baited into selling or shorting. But what's really happening underneath the surface is a pro-reversal. The big institutions, they use this low lunchtime volume to their advantage. It's way easier for them to push the price around, to hunt for stop losses, and to shake people out before, and here's the key, before they move the stock in its actual intended direction. They are literally setting a trap. So the million-dollar question is, how do you spot the trap without getting caught in it? Well, you look for a few key reversal signals. For some of those high-flying penny stocks, you want to watch a momentum indicator called the RSI, the Relative Strength Index. If you see it dip below 30, which means it's oversold, and then it suddenly snaps back up with a huge spike in volume, that's your tell. That's a massive clue. And for the broader market, like the QQQ, you're looking for it to strongly reclaim that super important VWAP level we talked about. That's the pros showing you their cards.
And now, for the final and often the most explosive window of the day, the afternoon power play. This kicks off around 2:30 p.m. and goes to about 3:15 p.m. This is when the big players come back from lunch and they are ready to make their final moves for the day.
So why is this window so powerful? Honestly, it's all about institutional positioning. This is the exact time when the huge funds, we're talking hedge funds, major institutions, are putting on their biggest trades to get their books set before the market closes. And that massive volume they bring can create some really powerful, really sustained trends right into the closing bell.
So what's the green light here? What are you looking for? A lot of the time, the biggest clues actually come from the options market. You want to watch for these huge, aggressive, bullish bets called call sweeps. If you see a flood of those orders hitting the tape on QQQ, especially while the market's already trending up, that is an incredibly powerful signal. Another big clue is to watch the order book, what traders call level 2. If you see these massive buy orders stacking up, basically creating a floor of support under the price, That's another sign that the big guys are getting ready to push it higher.
Now, I know this all sounds great in theory, but what does it actually look like in the real world? Let's take a look at some recent examples of these windows in action, because the proof is in the charts.
Just take a look at this. In a recent morning momentum window, QQQ followed that playbook we just laid out perfectly, and it rallied over 1% in just 20 minutes. Even more dramatic, look at this penny stock, RVPH. It pulled off a textbook reversal right during the lunchtime trap, jumping an incredible 15% right after springing the trap on all the sellers.
And what about the afternoon power play? Well, just a couple of weeks ago, right after these huge call sweeps were detected at 2:30 p.m. sharp, QQQ soared nearly $3 per share straight into the close. That right there is the power of following that institutional footprint.
So when you put this all together, what does it really give you? It gives you a framework. It gives you a new kind of trading edge that isn't based on some secret indicator. It's based on Wall Street's own internal schedule.
And here it is, all laid out on one simple cheat sheet. The morning window, that's all about confirming momentum. The midday window, that's about spotting the reversal trap. And the afternoon, that's about riding the big institutional wave into the close. 3 totally different windows, 3 distinct strategies, and all of them are based on timing.
You know, the most important thing to take away from all of this is that these patterns are not random. They really aren't. They're backed by hard data, by specific timing, and by years and years of repeatable institutional patterns. This is all about making that shift from random guessing to actually using the market's own rhythm as your guide.
And that really leaves us with just one final thought. You've now seen the playbook. You've seen the proof. You know the schedule that Wall Street itself so often follows. So the only question left is, are you ever going to look at the trading clock the same way again?